returning to the Fed, Jerome Powell made clear on Tuesday, according to the New York Times, that the central bank is prepared to react to recent signs of economic strength by raising interest rates higher than previously expected. And if incoming data remains hot, and hot is a rather subjective term, because if they're talking about 275,000 jobs, that's great. But that's not necessarily means that the economy is running too hot. Potentially returning to a quicker pace of rate increases. They have raised the rates in the fastest pace since the 1980s, pushing borrowing costs above 4.5% from near zero. That initially seemed to be slowing consumer and business demand and helping inflation to moderate. There is no signs that inflation is going. It's just that inflation has not weakened as much as expected last year, although I don't know if it was expected. It just hasn't weakened as much as at the rate in which the Fed wants. But it's we still have a situation where wage gains are going faster than inflation. That's what they're worried about, is the wage gains, if you ask me. And I would suggest if you asked Elizabeth Warren. Here is Elizabeth Warren at the Senate Banking Committee yesterday asking Fed Reserve Chair Jay Powell just how much damage is he willing to do to people's jobs, to presumably save people.
According to the Fed's own report, if you continue raising interest rates as you plan, unemployment will be 4.6% by the end of the year, more than a full point higher than it is today. Chair Powell, if you hit your projections, do you know how many people who are currently working, going about their lives, will lose their jobs?
I don't have that number in front of me. I will say it's not an intended consequence.
But it is, and it's in your report, and that would be about 2 million people who would lose their jobs. People who are working right now, making their mortgages.
Pause it for 1 second. I want you to just contemplate this. The Fed has supposedly a dual mandate. That is to constrain inflation and to provide as much employment as possible. They have set out, he has explicitly said, we need to soften the labor market. Explicitly said we need to attack labor and attack the number of jobs. Very sensitive about the implications of inflation. But when asked exactly like how many millions of people, like actual human beings, are going to lose their job under your stated plan, remember, 2 mandates. And for a long time, people should understand this. I don't know when they stopped. Maybe it was like sometime over the past 5 or 6, 7, 10 years. But 20 years ago, these people were all convinced and told us that there was a rate of unemployment you could not go below without the entire economy crashing to the floor. And that was something like 6%. We got that down to half that and no problem. And there isn't anybody out there who thinks that the main driver of inflation this go round has become because there's too much money sloshing around. And it's not because of wage increases, because up until very recently, inflation was at a higher rate than wages. It was because of supply lines. It was because of logistics. It was because of shutdowns in production, not because we didn't have the productive capacity, but because we had literally had to shut down the factories because massive COVID in China. And this guy's in charge of 2 things, inflation and jobs. And he can't even tell like what the goal is in terms of human beings only in terms of a percentage point. This is the mentality that they're dealing with here. 2 million people are going to lose their jobs under his plan purposely. That's the point. And he doesn't even know that number. No, he says it's not direct. Well, of course it's not direct. You're not going to go and fire each one of them. You're just going to make it harder for businesses to have the money to hire them. And you know that, and that's why you're doing it. It's explicit in their plans. All right, go back a little bit.
Or currently working, going about their lives, will lose their jobs?
I don't have that number in front of me. I will say it's not an intended consequence.
But it is, and it's in your report, and that would be about 2 million people who would lose their jobs, people who are working right now, making their mortgages. So, Chair Powell, if you could speak directly to the 2 million hardworking people who have decent jobs today, who you're planning to get fired over the next year, what would you say to them? How would you explain your view that they need to lose their jobs?
I would explain to people more broadly that inflation is extremely high and it's hurting the working people of this country badly. All of them, not just 2 million of them, but all of them are suffering under high inflation. And we are taking the only measures we have to bring inflation down.
And putting 2 million people out of work is just part of the cost, and they just have to bear it?
Will will working people be better off if we just walk away from our jobs and inflation remains 5-6%?
Let me ask you about what happens if you do this. Since the end of World War II, there have been 12 times in which the unemployment rate has increased by 1 percentage point within 1 year, exactly what you're aiming to do right now. How many of those times did the U.S. economy avoid falling into a recession?
You know, it's not as black and white as very
Just
very
looking
infrequent.
at the numbers, it actually is pretty black.
Alan
and white.
Blinder's written a book on this, and
There have been 12 times that we've seen a 1 point increase in the unemployment rate in a year. That's exactly what your Fed report has put out as the projection and the plan based on how you're going to keep raising these interest rates. How many times did the economy fail to fall into a recession after doing that? Out of 12 times.
I think the number is 0.
I think the number is 0. That's exactly right.
You know what? Really is concerning about inflation to these guys is that your loan that you took at a rate that is several percentages lower than the rate is today. That inflation makes your paying back that loan easier. Wages have gone up. Your loan is at a fixed rate, assuming it's at a fixed rate, which a lot of those are. That means it's easier for you to pay off that loan. He's protecting the banks. He's not protecting working people. I mean, it's... this is the idea that it's the only thing the Fed can do. That may be the case, but that doesn't mean it's the most effective thing to do, or it's even effective.
Yeah, or useful. Yeah, I mean, the real thing that needs to be done is things like automatic stabilizers, like expanded universal SNAP, maybe, or something like that.
Automatic stabilizers to help people on welfare, but also there's things called price controls. There's things called price controls and, if you want, even wage controls. I know this because I was alive when Richard Nixon, the Republican, imposed them. And so the idea that necessarily just because the only instrument that the Fed has is to raise or lower rates, it's got to go in one direction or another. And what we've seen is that as supply lines get repaired, we see prices going down. Don't tell me about eggs. I get it. But there's the bird flu. I buy eggs. I buy milk every week. multiple times a week on the milk. The kids drink too much milk. But the point is, you're not going to get the price of eggs lowered because you're throwing 1 million, 2 million people out of work. That's not going to happen. All right, in a minute, we'll be talking to Aaron Kleinman, Director of Research for the States Project of Future Now, about this huge race in Wisconsin, but also the special elections around the country that we've seen and what they might be telling us about what's going to happen in 2024.